Hello and welcome. I'm Blair Blackwell, and this is the Daily Market Brief. Let's catch up on what's moving in markets today. Good morning. It's Monday, January 12th, and this is your London Open Prep. The big themes: a softer US dollar, as a criminal probe into Fed Chair Jerome Powell raises fresh questions about central bank independence, and oil supported by Iran risk, even as some on Wall Street warn prices could fall later this year. The market's focal point is the Justice Department's investigation tied to Powell's past testimony and a Fed building renovation project. Powell has pushed back, saying the central bank won't bow to political pressure. The dollar slipped after the headlines, safe havens firmed, and global risk appetite looks more cautious into the European session. Some coverage also points to Senate resistance on future Fed nominations, adding to leadership uncertainty. And for markets, institutional credibility matters. Energy is the other swing factor. Protests in Iran and talk of possible U.S. correspondence near future action have brought the Strait of Hormuz back into focus, with crude holding above the high 50s in early trade on supply risk. Yet Goldman Sachs says West Texas Intermediate could fall toward $50 by year-end, citing rising inventories and a sizable surplus expected in 2026, with geopolitics the offsetting wildcard. Investors in Asia took it in stride, with South Korea's Kospi closing at a record, though oil remains the pressure point to watch. In Europe, stocks are set to start the week on a softer note as investors weigh the Powell probe and geopolitics. Brussels chatter includes potential sanctions on Iran and renewed emphasis on border control in the European Commission's next 5-year plan. In tech policy, Malaysia and Indonesia moved to block access to Elon Musk's chatbot over obscene content concerns, a reminder that regulatory risk remains part of the AI story. And on China, analysts argue new sectors like artificial intelligence and robotics are not yet large enough to offset the property drag, leaving growth more exposed to trade tensions. Turning to markets, the dollar's dip is supporting higher beta currencies, with the New Zealand dollar outperforming on talk of Fed independence risk. Gold is bid on the policy uncertainty. Oil is underpinned by Middle East headlines near term, even as longer-run calls flag potential oversupply. European equities look cautious at the open, while Asia's gains were led by Korea. Looking ahead, the calendar is relatively quiet today, but the week heats up with U.S. bank earnings and a closely watched Taiwan chipmaker update. Keep an eye on any developments around Iran and any official commentary on the Powell investigation, as those are likely to steer intraday sentiment. I'll be watching the New Zealand dollar against the US dollar, looking for an uptrend to persist if Fed-related pressure keeps the greenback on the back foot. I'm also watching the euro against the dollar for a similar bias, and the dollar versus the yen for two-way trade, given indications the yen has been weak, even as the dollar softens. In commodities, I'll look for gold to stay firm on policy and geopolitical risk, and crude to trade headline to headline as Iran news competes with surplus narratives. The takeaway: markets are cautious and headline-driven, with policy credibility and geopolitics back at the center of the macro story. That's it for today's edition of the Daily Market Brief. Thanks for listening. I'm Blair Blackwell. This podcast is for informational purposes only and does not constitute financial advice, trading recommendations, or investment guidance.